So, hi guys, how you doing? Uh, Once again, I'd like to promote my silver giveaway, giving away on the 17th, so you don't have much time left. Comment and subscribe in order to enter. Uh, this story comes to us from Silver Doctors, from their interview with Alistair mccloed that they done the other day. Good interview. I suggest you watch it if you have the time. So this is Alistair mccloed. To my surprise, we didn't see much Federal Reserve jawboning this week. We certainly had the perfect setup for flapping gums. Perhaps Fed officials were laying low as the ECB and Draghi took over center stage. In any event, the Federal Open Market Committee, FOMC, meets next Tuesday and Wednesday to discuss interest rate policy. It's very unlikely the FOMC will decide to hike rates. Most analysts and pundits in the precious metals camp are uneasy, expecting a big correction and/or cartel smackdown in any moment. I've outlined a few setups where risk for another attack has been elevated, but each time we do see profit taking and cartel capping. But buying overwhelms it, and worse, we have trended sideways on a weekly basis. You can see this most clearly in the gold trade from March 3rd onward. The cartel uses time in its favor, attempting to exhaust momentum as we move through these sideways consolidation patterns. A veritable paper issuance fiesta is underway, comex and beyond, absorbing rising paper demand. However, both paper and physical demand are not letting up, and the stalling to dilute momentum tactic hasn't worked. And here's a little candlestick chart. You can see silver on the upside. Gold pretty much looks the same way. Guess that's why they're expecting a big smackdown. Bottom line, once again, we have a setup for a hit next week. However, any damage the cartel is able to inflict should only be a very short-term challenge, requiring only a week or two for repair. Unlike April 2013 or any other period over conventional money under management, Unlike April 2013 or any other period over the last 4 years cyclical precious metals bear market, as a much larger percentage conventional money under management is not under any illusions about European banking sector recovery, nor global economic recovery. It was the near fully subscribed hopium of recent past. A growing percentage of the conventional finance world can also see that U.S. economy is in trouble, that the wealth effect is a lunatic central bank policy myth, and attempting to paper over a solvency crisis with more credit has failed. These fundamentals and more are indeed why we have seen the birth of the third phase of the precious metals bull market. If you'd like to follow Alistair mccloud's work, you can find him at Silver Doctors and at goldmoney.com. The first article below notes that the technical situation for gold price has sharply improved, to the evident surprise of many mainstream analysts. It discusses possible reasons behind the turnaround and implications for the future. This article that Alistair mccloud references during our podcast. So go check out that podcast. It's really good, I guarantee.